started recording this to share with other students. So maybe at the end, when all of you sign off, I'll re-record, I'll re-say all that so that that people can find it, because some of them are really helpful tools. And again, it depends on, like, what's hard, right, is that each of us, you know, we learn slightly differently than other people. And one person can just read through a book and like have it. And another person says, no, I need lots of practice at something. And so, you know, that's why we're trying to have these additional resources here for you.
Can I ask a couple of questions that don't have something to do with it, but I'm worried I'll forget?
Sorry, just a second. Let me having audio problems here. All right, I think go ahead.
Yeah, so like there's one assignment I didn't get the best grade on, but I got it done on time in the beginning, and it's one of those unlimited attempts ones. Is that some, like, if I went back and got the perfect score now, would it affect my grade in the class?
So if anytime you go back on an assignment after it's due, then it's just called like a study attempt, and it doesn't change the overall grade. I will say I'm open, especially in these early couple weeks, I'm open to like extending an assignment, like if someone wanted to try to improve their grade on something, especially as we're just figuring out sort of the process of the class. But then as we move forward, we're strongly encouraged, or strongly discouraged, I guess, from extending due dates unless somebody has a, you know, like a legitimate you know, major issue going on. But I would say, you know, if it's something that you're like, hey, I did the best I could, and now that I'm understanding how all this works, would you be willing to open it up so I can work on it and improve my grade? For sure. Just send me an email about which one, and I can do that.
Okay, and then my other burning question is, when we start getting to the proctored exams, are we allowed notes or calculator, or what are we allowed to do?
Yeah, so unfortunately, the answer is no. They don't allow any notes. They allow pretty much like a calculator. Not pretty much. They allow a calculator, scratch paper, and you can use Excel on your computer, and that's it.
Okay.
So I know that's sad, but that's one of those, again, it's an interesting thing. So I teach these same courses at another college, and there's just different philosophies at different places. And at BYU Idaho, the way they do it is they give the instructors very limited I guess opportunity to adjust the course. They kind of, I think they're trying to create like a consistent course for all the sections. And so, you know, they really discourage us from making any changes. And then they were very clear on the no notes thing, that is important to their accounting department. So sorry.
I wonder why they do that, because in the work world, you know, we have lots of different resources. So that would be good if they would go to that.
Yeah, no, yeah, my argument is that, like, never have I ever been called upon to make, say, like a strange adjusting entry when I'm in the middle of the like desert where I can't like Google it if I need to. Like, that doesn't happen in accounting in the real world. That being said, these early concepts, like the rules of debits and credits, which we're going to get into in the next chapter, and like the financial statements, those are things that are so foundational that almost like your times tables, it really does behoove you to kind of memorize them. So I could, in fact, when I teach this college, or this at Eastern Arizona College, and this first test, I don't allow any notes either, because I tell my students, this is stuff you need to memorize and have down pat so that you can then recall it and use it easily going forward. But then in my later chapters in my course I teach at Eastern Arizona, I allow limited use of notes, you know. So, but that, again, that's kind of the philosophy of the school and of the department, and that's the rule. So we, you know, we abide by it.
Thank you.
I know I'm pretty bad at giving like long answers to short questions. I apologize for that. I'm chatty. Other general questions, or before we get in, anybody asking like specific questions about problems or things like that?
Well, I would just like to mention, like I'll struggle, at least last week. I've been having an easier time this week, but I'll be struggling with concepts, and then I'll do the last assigned module. And if I would have just did that one first, it would have like made the rest of it so it's like it's almost like you should start with the last assignment and then do the rest of it. I just want to throw that out there. It's just kind of weird how they don't quite teach you what they're asking in the beginning, and then they teach you everything at the like after you've already struggled all week. Like,
Yeah, and I don't know if I don't think that's by design, of course. I do think that just like the quizzes are the most comprehensive of any of the assessments that we're doing here. And so as you go through that more comprehensive thing, you certainly are learning stuff as you go. I mean, of course, you're free to do them in whatever order you want, but often things like the financial statement analysis are like due midweek, and the quiz isn't due to the end of the week. So you'd have to really, carefully adjust your time so you could still get the other one done. So that's something I can definitely put in when we have to kind of give a feedback thing, saying, that I had that feedback. But
yeah, the supplemental study material seems to like answer all my questions I had like during the week or something. So
right. Also recognize that the supplementary study materials, they're not required. In other words, they don't impact your grade. So you can see right here, like SmartBook, I just have 11 up right now. Those are both worth points. Supplementary is not worth any points. And then in this case, the ethics assignment and the homework presentation for the presenters is. And so you're always free to kind of look at those supplementary study materials in any order. They're not due at a certain time. It can be a little confusing, but when we go to, actually, I don't want to go there because that'll show other people's grades, and that's not okay. But when we go to, I'm going to go to the syllabus. You can see over here, like the orientation assignments are worth 0% of your grade. The concept videos, 0%. And then, so it breaks down, and those supplementary studies are actually part of the concept videos, and so they're not part of your grade. And again, that can be frustrating because students are like killing themselves to do everything. And just learning how the course is scored takes a few weeks, which is again one of those reasons I'm sort of willing to say, yeah, I'll go back and open that one up for you, because it takes a little time to get used to the course.
well, I'm glad I talked to you because I was literally burning the midnight oil. I had like 10 minutes to spare one week for getting that last supplemental thing that I didn't have to do done.
Right. So,
so I'm glad I brought it up. Thank you.
Yeah, I would say, if you look at how the grade is broken down, the exams are by and large, they're more than half your grade. But then the next biggest is the quizzes, and then the homework support. And the homework support are just those 2 presentations that you sign up to do during the course. So those are, since there's only 2 of them, and it's worth 10% of your grade, that means each one of those suckers is worth 5% of your grade. So if you were to blow that off completely, your grade would automatically be down a full letter grade, 10%. So, and honestly, the way I grade those is like, if you give a reasonable effort, I give you full points. Because how are you supposed to grade that really, other than to say, did they make a video or did they not make a video, and did the video teach the topic? So make sure you do those 2 homework support. And I'm going to throw this out there in case anybody missed one, or anybody who ever watches this video. If you missed one, email me, and we'll arrange for you to do a makeup one, in one of the weeks when we're short a person or something. Like, I'm not here to hurt anybody's grade, but I also can't give credit for something that's not done. Anyway, and I mentioned like earlier in the course that all of these things, like the statement analysis, the quiz access, and the quizzes, those allow multiple attempts so that you can do them like again if you don't like your grade. Homework support is just doing it, and and you get the full credit. Ethics assignments, pretty much the same thing. Just do your best on them and you're going to get full credit. So the only thing that's really not controllable at all are the exams, and that's still controllable. You can study, do your best effort, but you can't retake them if you don't like your grade. And so if you can get your average on all of these things up above 90%, which you can because you can have multiple tries, okay, then even if you struggle with the exams, even if you have like a 50% average on the exams, you can still pass the class. And so it is really about controlling all the little things that you have more control over, and then controlling what you can on the exams, which is studying for the exam and doing your best. But I know some people are nervous test takers. Some people, Proctorio, the system that proctors the exam, makes them nervous, and so it makes it harder. So, if again, my focus as a student would be control the factors I can, so that if I do struggle on the exam, I'll still be okay. And most likely, if you're putting in the effort to do well on these other things, you're going to do better on the exam anyway, since that's the intent of the quiz is to get you ready for the exam. Any other
Brother
questions?
Fox,
Yes.
I'm just wondering, so with the exams, are they timed?
They are, but they give you like tons of time.
Okay.
Like, I can look and tell you the exact amount. Like it's not usually people running out of time that's the issue. It's people getting down to after they've been in it for 2 hours and they're just pulling their hair out and being like, that's as good as I'm gonna get it. When somebody's struggling with it, it's not that they run out of time. Let me tell you.
Because this week's quiz was a lot easier for me, but last week's it took me like 4 hours for 15 problems, and I was like, "Oh my heavens!"
And you come out of the quiz feeling like someone beat you up and stole your lunch money, right? Like what just happened there?
Yeah.
I'm just pulling up one of the exams right here, just so I can give you an accurate. I always forget the exact amount that let's see. Yeah, so the time limit on the exam is 340 minutes. So that's like 5 hours, right? 5 hours. So nobody actually ever uses that. And in essence, I don't know why they just didn't set it as not timed, but I guess they wanted to have a time limit on it so that if somebody quit without submitting, it would eventually time out and submit for them. So I've never seen anybody use all of that time.
Okay.
So if we were to take the test and then walk away, would Proctorio send you a message saying?
Yeah, that's a good question. So let me explain how Proctorio works, because it freaks people out. It's like computerized Big Brother watching you take your exam, right? So Proctorio is designed to ensure, number one, you're not bringing up other like screens and Googling. Number two, that you are keeping your eyes on the exam. Number three, that you don't leave the room and come back. So the worst case scenario, let's say you're taking your exam and one of the kids is out screaming outside the room because they got hurt, and you get up and you leave, and then you come back in. The worst thing that's going to happen is it's going to flag that and send me an email that will say, hey, it looks like one of your students had an exception to the rules. And then I would review, it'll send me like a little thing on the video and I review it. And if it's at all iffy, I'll email you and be like, hey, so it looks like this is what happened. And if you just said like, yeah, I had to get up and take care of my kid, that's fine. Like, your family's more important than not leaving during the exam. But if you have a person who's, say, continually doing it, or it's meant to keep us from cheating, but like some people are afraid it's like just going to lock them out of the exam if they like make one little misstep. It doesn't ever lock you out of the exam. The worst thing it does is send me an email saying there's an exception to the rules for me to review. So I would say like worry less about Proctorio than it seems like, because it's not a big deal. Of course, it's best if you can have a quiet place where you can do the whole exam in one sitting, and you keep your eyes on the screen. And but even then, what's hard about it is if you have scratch paper, which is allowed, and you're making notes on your scratch paper or on your calculator, again, the worst thing the system's going to do is say they were looking away a lot, they could have been looking at notes. But that's pretty easy. And we watch it to see, no, they were obviously working on their calculator. So, and like I said, it's even not as sensitive as you think. In other words, I know everybody's using their scratch paper and their calculator, and rarely do we get an exception. It would have to really look like somebody was reading off of notes or something like that before they send it to me. So that was, again, a really long answer, but what I'm trying to say is don't worry too much about it. Just take the exam and it'll be fine.
That was a great explanation. I'm always worried that my eyes are not going to be staring at the screen the whole time.
And you can't do that, right? You
And
can't just be like,
I can't write, on the scratch paper if my eyes are on the computer.
Right.
So
yeah, like I said, it's super rare that I get an exception report. Like that is because I think if the computer flags it, the first thing they do is there's somebody at Proctorio who actually reviews it. And so most of those, they go, oh no, they're just using their scratch paper and that's allowed. But every once in a while, I have got people cheating on it that they, like, for some reason think it's like they're pulling up Google and they're searching up answers. And I'm like, why would you do that? You're on the system, but that's rare. Most people are honest people, right? But some people start to feel the pressure sometimes and make decisions that they wouldn't normally, I guess. Anyway.
The last exam I took, I had to use the restroom many times. I had just a medical issue going on. So I don't know if my teacher got 15 emails or something.
Did you email the teacher and let them know that ahead of time?
No, I didn't know that the teacher would get an email. I thought just Proctorio would flag me or I don't know, but nobody contacted me about it.
They were fine. Yeah, no, like I said, that'd be the worst thing. And if somebody emailed me and was like, hey man, I got ulcerative colitis, and like, okay, like what am I gonna do? I'm not gonna be like, you have to prove it to me. I would have, if somebody wants to make that story up so they can go out and check their notes every 5 minutes, there's probably no way for us to completely deal with that. Give me a doctor note or something. I'm not about to do that from Arizona where we're trying to, watch everybody's very move. We just,
yeah.
Anyway.
Yeah. And so, and last semester when I was taking a class, my internet kicked out on me. And so if you lose the internet, it does close it out, but they're really helpful. All you got to do is put in the chat box, hey, look, I got kicked off. Can you reopen up the test? And they did it for me really quick. So they're they can tell me you don't have internet.
Yeah.
So it was like,
no, Proctorio's been really, they've been really great, right? And that's a good thing. Let me bring this up for others who are watching or maybe who might watch it on the recording later. Like if I just go up here to my extensions and click on it, you'll see my little gray shield for Proctorio, and to the right of it, I can open Proctorio, and from there I can go to their chat and just say, hey, I'm having this issue, and they can usually fix stuff for you right there. The only way they can't is if you wait forever until the exam closes out. Then they're like, we can't reopen the exam because only your instructor can do that. And also, no, I can't actually reopen it once it times out. The best I could do is let you retake it. So if you have an issue, it's best to try to fix it then at that moment. Anyway, so there's kind of some of the issues that I think people have questions about early. Any other questions? I don't want to beleaguer this, but any other questions before we?
Brother Fox,
yeah.
Are the exams comparable to the quizzes?
So yes and no. And let me tell you what I mean by that. That sounds like the setup for another long answer, I recognize. But so they're comparable in the sense that it is the same content by the same publisher, but the exams are always shown they're either multiple choice questions, or they are like, enter like a single number here. It's not like fill in this income statement or fill in this balance sheet. So that can make it feel quite a bit different from the homework in the sense that, or from the quizzes, in the sense that, instead of saying just fill in this whole income statement, it might be like, what's the net income? So you'd still have to either like make the income statement on your scratch paper to calculate the net income or something, but you won't be filling the whole thing in on the screen. Does that make sense?
Yeah, thank you.
Okay.
But we can use Excel, or can we use the Google Sheets,
Um,
or
I don't have a problem with you using Google Sheets. And I don't think there would be any problem with Proctorio either if you don't have Excel. Just so you know, you do have access to like free Microsoft Office if you're a BYUI student, you know, through the like their online Office 365. I can put that like a link to that in the announcements if anybody's interested.
okay, that'd be
But
great.
yeah, I think Google Sheets is fine too. I'm just not a fan of Google Sheets. Probably because I've always used Excel, so it seems confusing. It's probably the other way if you've always used Sheets.
I like Excel better, but I like that I
The
can have my Google Sheet wherever I am. So
Right. Well, that's what's
kind of
nice
okay.
about Office 365, right? Is it's kind of like that.
Oh,
It's all web-based now. Pretty
oh, I
pretty
didn't know that.
fresh. Okay. Other questions? All right. So we just finished up the chapter 2 stuff, and now we're heading into chapter 11 stuff. And chapter 11 is about stock, and it's a little confusing. Like when I teach this class where I can control the way the course is set up, I actually wait until later in the course to cover this because I think it's a little bit confusing for people who've never dealt with stock. So I had like a few slides here. I probably won't go through all of them because it would be tedious and tiresome to go through all of them. But whoops, that came up wrong. But let me just share a couple of these things with you real quick that may be helpful as you kind of launch into chapter 11. And these are just slides that I stole from the textbook publisher. Okay, it's still doing it this way. Let me tell it to switch. There we go. The textbook publisher will put like 80 of these slides out for each chapter, and it's just way too much. So I try to pare it down and just go over a couple of them that I think are most important to you. So first of all, before we even like try to cover what's on the screen, it's important to know kind of what we mean by capital stock. So capital stock is in the equity section of the balance sheet, and it represents money paid into the business by the stockholders, which is another word for the owners of a business. And typically what we do is we list on our balance sheet the stock of in other words, the amount of money that the owners have paid in. And we list it as its par value. And this is like a weird concept that I just want to introduce here, which means when companies are formed, they create a corporate charter. And on that corporate charter, which is just a document that tells about how their company will be structured, it lists a par value for the stock of the company. And it gives this amount that each share will be worth at its par value, which may be different from the market price of the share. And so then when we list the value of the stock, we have to list it as two different things: the par value plus any amount, they call it additional capital, above or in excess to the par value. So it's confusing already as I try to explain it to you, because you're like, I don't have any frame of reference for what this means. So let me show you a couple other things to help give you some context for it. So our stockholders' equity, that's the portion of the business, okay, that the owners own, as opposed to our liabilities, which is the portion of the business's assets that the bank or that lenders own. Includes our common stock, which again is money paid into the business by the stockholders, and then what's called paid in capital in excess of par, which would be any amount that the owners paid for the stock that was over and above or higher than the par value. And then finally, the retained earnings, which is the money the business has earned. In other words, our net income minus any dividends we've paid out. Also, if you have a question as I'm going, don't be afraid to just like bust in and ask, okay? Because it's really hard for me to see like hand raises and stuff on here. But if you're also thinking like, I want to hear what he has to say, then I'll ask, that's fine too. Just saying, I won't consider it rude if you ask a question. So let me show you what the journal entry would look like if we were to issue our stock at the par value. So this is a company called Dillon Snowboards. And on June 5th, they issue 30,000 shares of stock for $10. And it's $10 par value stock, and they're issuing it for $10 a share. So they're issuing 30,000 shares and they're receiving $300,000 in cash. What that really means is the company is selling off a portion of ownership in the company in exchange for cash. This is one way companies raise money, right? You can either borrow it or you can sell a portion of your company. So the journal entry would look like a debit to cash of $300,000 and a credit to common stock of $300,000. That's what it looks like when we issue our stock at its par or base value. But sometimes we will be issuing stock when the company has grown a little, meaning market share wise, meaning the market price of the stock is higher than the par value. So the par value gets set when we fill out all the paperwork to create our company. And so if the value grows, then we may be issuing the stock at an amount greater than its par value. So in this case, they issue 30,000 shares of $10 par value stock for $12. What that means is their cash goes up by 30,000 times the amount they issue it for, times $12, or 360,000. But we're still only going to record the par value, 30,000 shares times $10, as the par value of the common stock. And then any amount that was paid in over and above that, in this case, the $60,000, they're going to record as paid in capital in excess of par value on the common stock. So this is a little confusing. All it means is that when we list the value of our stock on our balance sheet, we're always going to keep the par value separate from any money we received in addition to that par value. So this is what it would look like on the balance sheet. You can see it says common stock, $10 par value. 50,000 shares have been authorized and 30,000 shares have been issued. So 10 times 30,000 shares issued is 300,000, plus the paid in capital in excess of 60,000. And then the retained earnings is on there, and that gives us our total stockholders' equity. All right. So that was a lot for me just to jump into when we don't have much experience with stock. It may even be hard to ask a question. If you're like, I don't really know what he meant, I'll just have to work on the homework assignment. Any questions about that concept that you can actually formulate if you haven't worked on it much yet? Okay. Like I said, I know for me, it's challenging when something's new to me because I have to kind of look at it first before I can really formulate questions. And that's pretty normal. A couple other concepts. Yeah, go ahead.
You'll just post this recording in the announcement so then when we can go back to it. Okay.
Yeah. So when you're doing it and you're like,
we
I
can
think
ask
you mentioned
questions.
something. And also, just so you know, like I was showing earlier in my additional study materials, this little like kind of the lecture portion that I'm doing here, I've recorded a full one from like the past. And so that one may even be cleaner than having to search through the meeting like this, where you could just, you could just go to modules, go to, where are we at here? Go to Brother Fox's helpful stuff. Whoops. It's so slow to respond that I'm like clicking all over the place. And then go to additional study content. And then go to like chapter 11 overview. And that would give you a whole video of me going through kind of this whole thing. also a shorter video that explains par value of stock again, but only in 7 minutes. You don't have to watch a whole 25-minute video. So just know that's there as well, where I've kind of tried to just give you the pertinent stuff and not have the rest of the meeting. But if there's something from earlier in the meeting that you wanted to look at, that'll be posted in the announcements as well.
Okay. Yeah, I think those additional study content, have been very helpful for me this week. So
Like and share. All right. I always put that on there just so you guys know I do not monetize those videos. Like I don't have enough followers that I'm making money off of it. But what's funny is how often I'll get like somebody will post something and they'll be like at Rutgers University or something and being like, man, these videos really helped me in my class. And so I just tell people, you know, if you like it or if you comment on it, it just makes it more visible to other people. And if it's helping other people, that's great. I guess there's not that many accounting texts to get used out there, so it's out there. Anyway, so all right, let me go over a couple more things and then I can try to answer any other questions. Okay. It really wants to have it on there. All right. Sometimes, especially with a small business, we'll issue our stock not for cash, but instead for like a non-cash asset. Say somebody has a piece of land we would like to buy to build our warehouse on or something like that. And we don't really have the money to pay them. Instead, we can give them shares of stock in exchange. So the way we do that is we will debit the asset that we're gaining, land in this case, by its value. And then we'll credit common stock at its par value. And then if there's any difference between the value of the asset or the cost of the asset and the par value of the stock, we would credit that as paid in capital in excess. So if I was reading this journal entry, what it would in essence say to me is we received our land increased by 105,000 and that our common stock went up by 80,000 and our paid in capital in excess went up by 25,000. In other words, we bought the land from a person, and since we didn't have the cash, we just gave them stock instead. Or maybe we have the cash, but they wanted to be owners in the company, right? So we did that. I say small companies, but big companies do this all the time too, right? A lot of times when they'll acquire another company, a big part of that transaction is that they give some stock in exchange for the other company they're buying. So a dividend, we've already introduced the idea of in the course, and all a dividend is money that we're paying out to our shareholders. Remember, the shareholders are owners of a company. And so the reason you invest in a company is you'd probably like to make money for that investment. So when the business makes a profit, sometimes a portion of that profit will be paid out to the shareholders, and that's what dividends are. And so one way they do that is to pay what's called a cash dividend. In essence, what they do is they decide how much they want to pay in a dividend, and then by they, I mean the board of directors of the company, and then they divide up that dividend amount by the number of shares that are outstanding, and then pay, whatever that is, whether it's $1 a share or for each share that's out. So if you're the investor, you're getting a portion of the company's profits in cash. And if you're the company, what you're doing is sharing some of those profits with the owners. In a really small business, you might be the only shareholder, right? And of course, it makes sense when you have your own business that when you make some money, you'd like to pull some of that money out of the business. Others you'll let stay in the business, and that's what we call retained earnings. We're retaining the earnings in the business. Sometimes a company would like to pay dividends to its shareholders, but they don't have sufficient cash. And so instead, what they do is provide a stock dividend, meaning they give more shares of stock or a greater amount of ownership in the company to the shareholders. Typically, they either do what's called a small stock dividend, where they're distributing less than or equal to 25% of the amount of shares that were already out there. And sometimes they'll do a large stock dividend where they might even like double the amount of shares that are out. So just know that sometimes instead of paying cash, a company will pay a dividend in stock. It's pretty awesome if you're the investor, right? If I have 100 shares of the stock and they're going to do a 25% stock dividend, that means I'll end up now with 125 shares of the stock. So I like it. Another concept that we need to just sort of understand basically before we get into the work is stock splits. Sometimes a company will feel that their market value has gotten too high on a stock, so they'll do a stock split. And in a stock split, what we do is we divide the par value and the market value of the stock and then multiply the number of shares. So for example, what we're showing here is what's called a 2-for-1 split, which means if there were 100,000 shares outstanding of $20 par value stock before the split, after the split, we would have 200,000 shares outstanding of $10 par stock. You'll notice the dollar amount of $200,000 doesn't change. And if I were a shareholder, I might have 100 shares of $20 par stock, and after the split, I would then have 200 shares of $10 par value stock. Again, what happens is often the market price of shares will grow as the business grows, and more people will invest, which will drive the price up. And at some point, the value of the share becomes so high that psychologically people are reluctant to invest in the company. And so companies will often do these splits to keep the market price lower, even if it means having more shares outstanding. One example, when I used to work for Edward Jones as a broker, I knocked on a lady's door and like I would just do cold calls if it would get slow, and asked her if she did any investing, and she said yes. But well, her husband did, but he'd passed away. And I asked what company he invested in, and she said Coca-Cola, and that he bought some shares back in 1951, I think it was. And I'd asked her, well, do you still have the shares? And she said, yeah, they're sitting in a shoebox back in our spare bedroom. And I thought, well, that's weird. So do you have any idea what it's worth? And she said, no, not really. That was his thing, not mine. And so I said, do you mind if I find out for you? How many shares did he buy? And she said he bought, I'm trying to remember now, it was either 200 or 500 shares of the stock. And so I went back, she said I could figure out how much it was worth, and if it was worth something to let her know. And I'm thinking Coca-Cola, probably worth something. So went back to the office and found out that, sometime in some years, Coca-Cola had a 2-for-1 split. So her 500 shares became 1,000 shares. And then a few years later, it had a 3-for-1 split, which means her 1,000 shares became 3,000 shares. And anyway, it kept splitting over the years up until this was 2000 or 2001 when I was talking to her. I added it all up, and I came up with, she had like 70,000 shares of Coca-Cola. Or not, it was more than that even. Like, anyway, it was a lot. And I remember asking my office assistant, to recalculate it, make sure I didn't make a mistake, and then multiplied it by the market price. And I remember wheeling out of my office in my little wheelie chair and like looking around the corner at the office assistant. And I said, hey, did you get that stock sitting in that lady's shoebox is worth $2.1 million? And she said, yeah, that's what I got. And so I called her up and said, hey, I think you've got like $2 million sitting in that shoebox. And in traditional South Texas manner, she said, well, that's pretty good then, isn't it? Like that. That's what they say in Texas. And so she was able to realize she had a ton of money sitting there. She was an old single lady, never had any kids. Her husband had passed away. So she actually got a family member who was a lawyer to draw up a trust, and she was able to create quite a nice scholarship foundation for the kids in that little town there. Anyway, hope that story wasn't boring. But the idea with stock splits is that the shares will split over time, which will knock the value down, but increase the number of shares. And companies typically do that to try to keep the market price of the share at an attractive price so that investors will still want to invest.
So then even though it splits, I don't really know stocks a lot, but so even though it splits, so you have, like you said, you have more stock options. And so then you can just wait,
Mhm.
like wait to sell. And then when it's high, then you can sell and you have
Yeah.
you have many more. Okay.
Yeah. Well, and the dividends
So
usually
it doesn't decrease the value of them as long as you sell when it's high.
right. What it does is it makes the value exactly the same. So if I had shares that were $100 and I had 1,000 shares worth $100 and they split it 2-for-1, I'd now have 2,000 shares worth $50. So it'd be worth the exact same. But then it will continue to grow from there, especially a company like Coca-Cola that has a product that most people like and that will continue to sell. And so now as it grows in price, that's multiplying by the 2,000 shares I have instead of 1,000 shares. And in her case, what was 500 shares turned into 70 or 80,000 shares or something crazy like that.
Okay.
So it was cool for her. It was pretty cool for me, but would have been more cool if she'd like adopted me as her son or something. But I think it was really nice what she ended up doing with it. And then let's see. So this is just a summary. Whoops, go up one more. This is a summary of what happens when we have dividends and splits. I just want to put that up there for you and have you know that is in the book, as when you're learning about it. If you're like, I don't remember exactly how this works, this little chart can be helpful and you can find it in the book. Or of course, you can come back here and look at it. One other concept, last one we're going to talk about, because this is getting long, is preferred stock. So preferred stock is another type of stock that businesses can issue, different from common stock. And what's different about preferred stock is it typically has a higher par value than the common stock. And it's most companies don't issue any preferred stock, or they only issue small amounts, and it's usually just for like the board members and kind of the higher ups. And what's nice about preferred stock is it typically will pay like a guaranteed dividend, as opposed to like common shares, which if the company makes money, then they'll pay a dividend. If it doesn't, it won't. Preferred stock will pay a dividend all the time. So just know on the balance sheet, it's pretty common that we'll have a section that shows preferred stock at its par value, plus any paid in capital and in excess of the par value, and then common stock at the par value, plus any paid in capital in excess of common stock, plus retained earnings. And that's what will make up the stockholders' equity section. Okay, so that was kind of a lot of new information. Like I said, if later on as you're doing the work, you want to come back to it, you can watch this video, or there's the video in the additional study area. So we're about out of time for tonight. Are there any other questions, comments, or just general complaints? Do you want to yell at me and tell me I'm a horrible person? Whatever you need, I'm here for your cathartic response. Or is that enough for one night?
Congratulations on your new grandbaby.
Thank you. That's number 6. We're pretty excited. She's tiny, but she's beautiful.
That's awesome.
I showed it to my daughter and she made me replay it 6 or 7 times.
What, the baby, the video of the baby?
Yeah.
Smacking her lips with her milk mustache?
Yeah, she loved it. So.
Awesome. Good to hear.
Where do they live?
They live in New Mexico.
Okay.
But they'll be moving down here in December, so my son can finish up one more semester of school, and then he's trying to get into PA school. He thinks helping people with health problems will be better than being an accountant, but whatever.
All right. Thank you.
All right, thanks very much. And thanks again for the prayer at the beginning, Mark. But we'll offer a closing prayer. I'll do that unless somebody else is just dying to. But I'll go ahead. Our dear Father in heaven, we come before thee grateful for the opportunity that modern technology provides to us to meet over long distances, to learn information that may be helpful in growing our own businesses, strengthening our families, and strengthening the kingdom of God. We are grateful for the blessings of the conference we just had and the things that we were taught. And we ask thee to help us to to do our part to gather in Israel and open the blessings of the gathering to as many people as we can, that we might find joy with them in thy kingdom. We love thee, and again thank thee for this opportunity, and we say this in the name of Jesus Christ. Amen. All right, thank you everybody. Have a great night.
Thank you.
Thank you.